According to the World Bank, emerging and developing economies in the Europe and Central Asia region are on course to contract by 4.4% this year, the worst recession since the global financial crisis of 2008. According to the World Bank, the pace of recovery depends on the duration of the COVID-19 pandemic, the availability and distribution of a vaccine, and the degree of improvement in global trade and investment. As a result, growth in the region could be weaker than expected if the pandemic worsens. At this point, growth is expected to recover in 2021 between a range of 1.1 to 3.3%. The outlook remains highly uncertain, however, and the risks are tilted to the downside. We can now listen to the World Bank Regional Director for the South Caucasus, Sebastian Molineus, on what's good and bad news for the region in the recent economic update.
Now, the good news is that we expect that you will see a recovery, an economic recovery next year, somewhere between 1.1 and 3.3%. However, this outlook is highly uncertain and tilted towards the downside, if I'm honest.
As for the local picture, the World Bank says Georgia's economy is projected to contract by 6% in 2020, reflecting the strong mobility restrictions at the start of the pandemic, job losses, as well as continued restrictions on international tourism, which contributed around 8% of GDP prior to the pandemic. This is definitely the most pessimistic outlook among IFIs so far, as it seems the welfare impacts will be equally severe. As many as 160,000 Georgians could fall into poverty in 2020, and over 400,000 could suffer downward income mobility, World Bank reports. As for the growth outlook for 2021, the World Bank projects that the growth will reach 4% in 2021 as the shocks related to the pandemic dissipate and tourism recovers alongside improving consumer and business confidence. We can now listen to the World Bank Regional Director for the South Caucasus, Sebastian Molineus, again on what's good and bad news now for Georgia in the recent economic update.
Now, the good news is that the government has put in a number of sound macroeconomic policies in place, and these have allowed the government to support households, to support firms, and to make important investments into the health sector and in terms of social protection programs that have enabled essentially the government to buffer the shock somewhat. But again, there are a lot of uncertainties in this respect that we still have to monitor very carefully.